Welcome.
Okay, we are starting the recording.
Fantastic. All right, well, welcome to everybody who's joining us today for our webinar with Alex Nichols from ImpactAssets in Bethesda, Maryland. We've been wanting to do this actual webinar. Well, we thought we would probably have done it live in a different era, but now everything is, of course, a webinar and via Zoom. So thanks for those of you who are joining us today. One of the things at Omega that we really believe in is the idea of integrating your values, vision, and wealth. And so one of the ways that we can do that very effectively is through a donor-advised fund strategy. Alex is going to talk about the logistics of that. I think many of you who are on the call are going to know how, what the basic mechanism is. But what we also want to talk about in this time of coronavirus and many social justice issues coming to the forefront, we want to talk about how can you use, how can you learn more about how you can support people in need, both around who are impacted by the coronavirus, and as it turns out, as Alex is going to talk about, it's intertwined with social justice issues. We've been working with ImpactAssets for a number of years because we don't want to just set up a charitable strategy or a charitable fund, a donor advised fund for our clients. We also want the underlying investments and the opportunities that are available to our clients to perhaps align with their investments. So one might call it socially responsible investing or impact investing. So not only is your money doing good going out to charities, but while it's being invested in a way that hopefully you can feel really good about it and that aligns with your values. So we've had that partnership for a number of years. Today we have Alex Nichols, and thank you for being with us, Regional Director at ImpactAssets. He works with a number of advisors like us and with family offices to amplify the impact of their philanthropic dollars. Alex has been working with high net worth individuals and financial advisors and impact organizations for a number of years and joined the ImpactAssets operations team a while back. Before that, Alex was with the law firm of Catton, Muchin, and Rosenman, and has worked with the public finance group on multifamily affordable housing. So brings some different areas of expertise and understanding. What I'm most excited about that Alex does outside of ImpactAssets is that he is on the board of, he's a board member with the Black Girl Ventures, a nonprofit focused on creating access to capital for Black and brown women founders. Of course, I get really excited about that. He lives locally in the area in Kensington, Maryland with his wife. Alex, thank you so much for being here. It's really great to have you.
Thank you so much for that, and I appreciate the introduction, and so good to be here. The only addition I would have to the introduction is that now, along with my wife, we have our new puppy that we rescued that we named Fauci. So there's one more in the house. But thank you so much for having me. And you know, this conversation is so important because, you know, one of the things I've always enjoyed about working with Lisa and the team at Omega Wealth is the idea that the conversation about aligning values with your wealth is not a surprise, as it might be with other firms. Growing up, I came from the meat and potatoes world where you either had to decide, I'm going to make my money, and you know, that'll be that part, or I'll give it away to charity. And those are not bad things, but to have the ability to have both of those at the same time is really a goal for us. And I'm going to go ahead and start our presentation now. At any point, if anybody has any questions or anything like that, please let me know, because this is really for you as well. And so just want to make sure that everybody can see my screen. All right. Well, thank you again for joining. One of the things that we have, the goal here is really how do we align our values and our wealth. Can everybody see this screen?
Yes.
Great. Thank you so much. So at Impact Assets, the reason why we were created was we wanted to help people align their values and their wealth. The area that we really focused on was the ability to use socially responsible investments with philanthropic dollars. So what do I mean by that? Well, you might have heard about donor advised funds, but if you haven't, you would be in the majority of people. They're still this odd term. You know, donor advised fund doesn't sound very exotic at all. They were started early in the 20th century in New York as a way for people to essentially create private foundations, but have one sponsoring entity manage them. So in this instance, Impact Assets manages 1,200 different accounts for families where the client can put in a philanthropic contribution. So for example, we are a nonprofit. Somebody can make a grant to Impact Assets. They would put in their assets, and then with that money, they get a tax deduction as soon as they put the money in with us, and then they could grant those assets out to other charities. That's the standard version, but that has really grown in popularity over the last few years. In fact, the top charities in the United States are not the United Way or the Red Cross. They are donor advised fund sponsoring organizations. In fact, community foundations and donor advised funds amount to over $160 billion as of last year. So they have definitely grown in size. And we'll go over, you know, some of the reasons. But the reason why Impact Assets was created was because we had a specific focus, which is that we like the idea that people could put money into a philanthropic pool and then over time grant it out. But we really liked that people would be able to not only, as Lisa was saying, grant the dollars out, but know that their invested assets could also have a positive impact. And the way that we do that is we allow our clients to not only grant the assets out, but make impact investments. These could be things that we'll go over, but they could be everything from a socially screened mutual fund to the Calvert Impact Capital Community Investment Note. But really the idea is that you don't only have to have an impact with the 5 to 10% of the money that you grant out a year. You could have impact with the entire corpus of your account.
Hey, Alex, let me add a couple things if you don't mind. So two things, and you're going to talk a little bit about more of what goes into this, and here I'll put my video on as well. So two thoughts. One is that why do you do this instead of like just giving money directly to charity? And often where we see this happening, there's a couple of great examples that where we've used this tool for charitable giving. We've had clients who have had a big windfall. Maybe they sold their house at a gain, or they sold a bunch of, they exercised and sold a bunch of stock options from their business or from the company they work with. And so they're going to have a big taxable event. And so one of the things that we can do is to help offset some of the taxes of that, to make a big donation in any one tax year. And the idea is that you don't necessarily want to give all that money away all to one charity, or maybe you're not even sure all the charities. And in like one of our clients' cases, we're actually going to put enough money into this fund to cover their obligations that commitments they've made, or that they want to make, you know, that they're thinking they want to do in the future after they're retired, but their cash flow will be different. So we'll already have this pool of money they can use for charity without having to impact their retirement cash flow. So it's a nice vehicle for that, where you get a big tax deduction maybe up front because it's a big tax year, and we think tax rates are going to be going up, so this is going to be even more attractive. But you want to dole it out over a period of years, or maybe aren't even sure where you wanted to go. You're still figuring out your charitable strategy. Otherwise, normally you would have to decide on your charity and send the cash or the appreciated stock right to them. Not everybody's ready to do that. So that's one point I want to make, why we use this vehicle. Number two, as I'm sure Alex knows, there's been some bad press about donor advised funds. And some big names you may have heard out there have utilized these donor advised funds as a possible charitable vehicle and tax, you know, with tax benefits. what's different about how our clients use these vehicles, and why I don't think this is a problem at all, is that they are actively getting the money out via grants to nonprofits, charities of their choice. They're not just hoarding the money in the fund, taking that big tax deduction and never releasing it out into the community. And that's part of the bad rap, is that people are getting the tax benefit, but then are not benefiting other charities, other nonprofit organizations. So that's not really the case for our clients at Omega. And we certainly encourage and recommend clients regularly are distributing money out of their funds. So I just wanted to make those couple of points for anybody who might be a little newer to the strategy.
Absolutely, and I'm glad you brought both of those up. On the first point, one of the easy ways to think about why you might open a donor advised fund is that it is giving, but with the most effective strategy that you can. So in that sense, as of right now, if you are a married couple and you are jointly filing and you're giving $15,000 a year of grants to nonprofits, that does not meet, that is not over the standard deduction that you would get from filing jointly. With strong planning, like with Omega Wealth, you could figure out and say, okay, if we have a goal of granting $100,000 to charity over the next 10 years, as opposed to giving $10,000 a year to charity and never getting any additional tax benefit that would make you decide to itemize, you could actually go ahead and do something called bundling, where you could give $50,000 in 2 of those years to charity so that you would be able to get that tax benefit. What does that mean? It means you're giving the same amount of money to charity, but you're paying less in taxes and more money is available to go to those end charities. So, it's really important for us that, to the second point, which Lisa made, is that donor advised funds have a bad rap because it could seem like people are just trying to, sometimes hide assets. But really what we do is, even if you open an account with us and you say, I'm going to just invest it in the community investment note for 10 years, I don't know what I want to grant to, I promise you it is having fantastic impact when it's being invested. And to Lisa's point, we are happy to hear that people are really pushing against donor advised funds to have more of a positive impact, because we completely agree. A little bit about us before we go on is that we've been around for 10 years. And in that time, we have about $1.2 billion of assets under management. And we have 700 plus impact investment positions. What does that mean? That is everything, like I said, from a private debt community investment option to, we have 153 venture investments were made in 2019. That is everything from any of the locals in the DC area might have gone to Sweet Green or might have had a Beyond Meat burger. Those have all been investments that our clients have made from their donor advised fund. And then as well, we have a real focus on our ability to grant. 45,000 grants plus have been awarded last year. What we say is that when you have this money, you can align your values with your wealth. And in the same way, what we say is, if you have an issue that you're trying to solve, for example, let's say you're really focused on the racial justice movement, you can not only say, I want to grant to X, Y, and Z nonprofit, but you could do things like invest in a fund that works to support underprivileged and underserved communities throughout the US. So it's really saying that there's this entire pocket of money that you've set aside for charity. Let's make sure that each one of those dollars are working towards that goal. When our clients come to us, the way that we're able to figure out what their values are is that we try and work with them by both initially setting out and figuring out, well, what is your impact thesis? When you complete an application with ImpactAssets, you have to let us know which are the sustainable development goals that have been developed by the UN that correspond the most with the issues that you care about. That could be everything from clean and affordable energy to affordable housing. But what we do is, through that, we try and help you think of an investment strategy that most aligns with that impact thesis. Then we work to make those investments or help you figure out those grants. And on an annual basis, we provide reporting and are happy to always talk with our clients and say, you know, here's an option. Maybe you could think about this type of fund, or, you know, maybe you know that you have a big grant coming up next year to your house of worship or your university, so we need to make your investments more liquid. We're always happy to make those changes depending on what the situation calls for. And like I said, as we, you know, with the SDGs, these could be the Sustainable Development Goals. Sorry if I used the lingo too much, but you really have the ability to say, if these, let's say I have these 6 goals that I care about most, here's where we might be able to say, well, hey, here are 3 that it might make the most sense to send grants to: quality education, clean water and sanitation, or life below water. Then you could also say, well, I'm willing to maybe take less of a return on an investment, might not make as much on an investment, but I'd also like to work on those goals. But when it comes to market rate investing, maybe there's a mutual fund that we could put you in that's working on things like affordable and clean energy or sustainable cities and communities. But the goal is that all of those dollars will be working towards different goals. And as I mentioned before, this is a slide that I love. These are all the different investment options that our clients have invested in over the years. And as you can see, it is a wide variety. It is everything from our standard portfolios where, you know, like the conservative, moderate, and aggressive portfolio that you could go into, to direct investments that our clients have recommended into organizations like Vamos Ventures or the Beyond Meat and things of that nature. Now, what I just discussed were all the things that you could do with a donor advised fund. But we really do find ourselves in a time where there are priority issues that we need to respond to philanthropically immediately. And so ImpactAssets worked to originally create what we called our COVID response fund, but has since evolved into not only a COVID response fund, but our social justice fund as well. What I'm going to do next is actually go through this COVID response fund, because we find that for our clients, it's not only understanding that they want to stop the spread of this disease, but they want to make sure that these underserved communities and, you know, members of our country that have not been treated well this entire period, you know, over the last not only few months but 400 years, that we can actually have the best response possible to help them. You know, we've all been impacted by COVID, but one of the nice things is that we have the ability with these philanthropic dollars to actually say we can make an impact as well. We are going to have a long road ahead. You know, as everybody has seen, depending on what state you're in, you know, things are more than likely returning to shutting down a little bit. I saw recently that, you know, Virginia was having additional rules added, but it's important to keep in mind. I heard from one advisor, they said, oh, well, we raised $30 million across all of our clients for COVID response, so we're done with that. But as we all know, the COVID is not done. This is going to be something that our society is going to be dealing with for many years to come, and we need to make sure that we have the tools at hand to be able to respond with both philanthropic dollars and traditional assets as well. Outside, you know, some of the stats that we have seen are really important to highlight. 2/3 of healthcare workers have cited an insufficient supply of N95 masks as of May 2020. 60% of COVID-19 deaths were reported from counties with higher minority populations. And 17 to 45 days of cash on hand is what most small businesses have. You know, as we see this, we're not only seeing, you know, this is something that requires a multi-pronged response, because you look at all these different areas that COVID has had and you say, where do we start? ImpactAssets took a look at that entire space and said, here are the areas where we think we can have the most impact. So we created 3 areas. We decided to focus on frontline heroes. So these are companies that are on the front line of fighting the pandemic. Mission critical change makers. So these are impact investing companies that are focused on things like social equity, the environment, things of that nature that have been threatened by the economic downturn, but we need to know that they're going to succeed if we want to come back better from COVID. And finally, and what we've seen the most excitement for, is working to support underserved businesses and individuals. These are people with limited access to government aid, both domestically and globally. And I'll go through a little bit more about each one of those, but these were the three that we really focused on. And we have the ability through ImpactAssets to both make grants and recoverable grants into these specific pools that we have. We are not charging any management fees or overhead. We're keeping our expenses as minimal as possible, and we're bringing the dollars in on a rolling basis. What that means is that we are really trying to, as quickly as possible, get dollars out the door to the communities that need them the most. The first area that I wanted to touch on, because it's really exciting, is to see the Stop the Spread Fund. Stop the Spread was actually started in response to a op-ed that was put out by two CEOs saying that CEOs across America see that there is a disconnect between supply and the demand for the tools that we use to fight COVID. What they did is they were able to pull together a ready pipeline of investment opportunities. So they went out and they found organizations that had strong manufacturing capability. And they were able to connect those places that were shut down because nobody right now is, necessarily buying T-shirts. And they said, this hospital has a need for masks. Can you actually open up those factories again and get those masks made? And so they have worked to use the private sector leaders and subject matter experts to find the partnerships. That has already turned into 85 unique partnerships where 20 million plus pieces of PPE production have been facilitated. 40,000 plus ventilators have been supported. And there have been $65 million of funding needs identified just as of March 2020.
Alex?
As you can see, yes.
Sorry to interrupt. We had a question that came in. You mentioned recoverable grants. What are those?
Absolutely. So recoverable grants are the ability for clients through the Donor Advised Fund to support this fund. Investments will be made for 3 years. And then as these investments are made into these funds, there is the potential that there could be some return of capital after that 3-year investment period that could be returned back to the Donor Advised Fund account. It sounds somewhat vague because quite frankly it is. Never before have we ever said this to our clients. We are always hyper mindful that we say as much as possible, here's your expected return, everything like that. But in this particular instance, what we found is that some clients want to support COVID response and racial justice causes, but they also, say, well, after potentially a 3-year period, I would like to potentially have whatever funds are available returned to my account so that they could be used to go and grant to the causes that I was supporting previously. So that is an option that we have available starting at $25,000 if people wanted to use their Donor Advised Fund to make a recoverable grant.
And is that new just from COVID? Is that a new thing then? Or have you had them before?
Yeah, and the recoverable grants have been something that we have seen, and they're a great tool. And in fact, I'll talk a little bit more about them later on in terms of how the COVID funds are using them. But they are a good tool. I'll give an example that I know of. There was a client of ours that really wanted to support an animal shelter in Virginia. They were building a whole new facility that was going to be used to spay and neuter animals. And they knew that they were actually going to be getting a significant amount of money from different community vet organizations that were going to take their animals and pay that organization to spay and neuter their pets. But they didn't have the initial funding to pay for the construction of the facility. What our client did is they were actually able to make a recoverable grant to that animal nonprofit, and they said, here's this money, I'm making a grant to you. It is understood that, if in 5 years you have made this facility and you have started getting those payments from all those different organizations, you will actually grant back to my Donor Advised Fund. the best way of thinking about it is it's more of a handshake agreement than something like a direct investment or making a loan to an organization. That is what worked well for that client because they did not want that that animal nonprofit to feel that they would have to shut their doors down if for whatever reason the facility was not successful. So it definitely is a tool that could be used within philanthropy to support organizations.
Thanks, Alex.
Absolutely. So going back to the Stop the Spread Fund, we definitely have the ability, and these were just some of the needs that have been identified, where things such as testing, where they're researching responses to COVID, helping find viral load tests, creating PPE so that there are more masks that are being made, and creating ventilators. All of these things are being worked on by the Stop the Spread Fund. When it comes though to, and this is where we're jumping a little bit, but as I said before, ImpactAssets knows of many organizations that have been at the front line of working on things like climate response or social equity groups. We want to make sure that those types of organizations will have the ability, if they were already successful, to make it through this economic downturn. We are not throwing money at organizations that were failing already necessarily, and we're just going to give them more assets. These were organizations, for example, a impact investment fund that was serving underrepresented entrepreneurs, customers, and markets. They might have already been successful, but because of the downturn, they might not be able to get a bridge loan or something like that to make it through this downturn. We want to make sure that through this fund, we are potentially giving these organizations the assets they need to continue. And then finally, as I said, the Business and Community Resilience Fund is supporting the individuals and companies that urgently need help to recover and rebuild from this downturn due to COVID. I'm going to name two organizations that come to mind specifically. One because I'm on the board of it, but the other because I've worked closely with them, that are hyper-focused on saying, what do we do to support racial justice initiatives during this COVID crisis? Unfortunately, those two are hyper-connected, both the COVID and racial justice crises. Black Girl Ventures was an organization that was started to fund women, Black and brown women that wanted to start their own businesses. By and large, only 0.2% of investment dollars go to, or venture capital dollars go to Black and brown women founders. That happens for a variety of reasons, but what Shelley Bell at Black Girl Ventures has said is, I want a chapter of Black Girl Ventures in every city across the country so that Black and brown women can be supported not only by the investors that want to support their companies, but by other founders to see that, other people that might be experiencing the same types of issues as they have. She has created a virtual co-working environment so that around the country now, as these founders find themselves alone, they can be supported virtually and work with each other and figure out and share resources. She really is doing everything she can to make sure that, unfortunately, we have seen over 60% of African-American owned businesses in the US, small businesses, are going to shut down due to the COVID crisis. She is doing everything she can to make sure that these Black and brown women ventures are going to be supported and not be part of that statistic. Another example that we have listed here is started by a group called Hispanics in Philanthropy. What they are doing is they are saying, we have always responded to things like hurricanes or the border crisis with pure philanthropy. But what they're doing is they're saying they want to raise $60 million so that is $1 for every person of Latinx or Hispanic ancestry in the United States, and actually create an investment fund to show that you can invest to support Latinx entrepreneurs. So it is doing everything from a debt investment to help somebody start up their new company, to a venture capital investment into a new tech company started by a first-time fund manager. You know, it really is saying that, you know, grant dollars aren't necessarily the only thing that could be used to build up a community, but an investment into a community can be just as much, if not more, important. As we see here, you know, we have the ability not only to focus on each one of these funds, but to support across all of them right here. This is a $1 million portfolio example, but, you know, as I said before, it could be done for, if you wanted to make a direct grant, as little as $250, and for a recoverable grant, you know, as little as $25,000 that you could put money into each one of these funds. Before I go on, you know, one of the things I also wanted to touch on before I talk about our investment process is really how, outside of this fund, how you can access these different types of organizations. What we have found is that there's a lot of, best way to phrase it, I would say, is there's a lot of interest in helping, but sometimes you don't know where to start, and you're almost sometimes daunted by knowing where to start to figure out, how do I support racial justice or things like that? One of the things that I'm happy to do is provide a list of resources that has been sent around by different organizations where you could, you know, these are articles, podcasts, things of that nature. But I would also say there are different organizations that are very trusted, such as Charity Navigator, GuideStar. These are places that, you know, have always done important job of rating nonprofits to say, you know, are these organizations that we can trust with funds? They all have responses to how you could fight both the COVID response and racial justice issues. And so those are great places to start your diligence process. As far as ImpactAssets goes, as you can see here, we work to make sure that through our sourcing, we are working with the actual communities themselves. You know, so for example, the Boston Impact Fund. This is a fund that's created outside of Boston, Massachusetts, to really make sure that they know their community well and they can figure out how to source the dollars most effectively to make sure that their communities are supported. The way that our due diligence team is second to none. We have 9 investment professionals that we have working on this just on our staff. And then we have an investment committee that has over 169 years of impact investing experience. And finally, as I said before, when it comes to making these types of investments, you know, we really focus on our execution, and we've made 145 investments in 2019 alone. One thing that I also wanted to bring up here briefly, and it might not be as specific to what we're talking about here, is just though the way that clients can think of how to use their philanthropic dollars. Things like a forgivable loan or a recoverable grant, a low interest loan or a market rate loan. These are all the things that go into our fund, but we want to, it's really the thing that we found is that it's helpful to be flexible when it comes to aligning your values with your wealth. So as I said before, sometimes a grant is the best answer to dealing with a specific issue. If you're interested though in something like supporting microfinance, one of the best responses might be investing into an organization like Microvest, which is actually also based out of Bethesda, Maryland, and they're on our platform. They have a fund that's available to our clients for $10,000 minimum, where you can actually go ahead and invest into a microfinance fund. It's not necessarily going to be the right fit for everybody, and you know, you could always work both with our team and the Omega team to figure out what works best. But I know for a fact that, you know, finding what works with your philanthropic goals can be something that can be very inspiring, not only for yourselves, but oftentimes what we've found for the next generation as well. So, you know, if anybody on this call has family members, being able to connect and say, this is what an investment could look like, is something that it can be really eye-opening. You know, this slide just talks a little bit about us, but it gloats a little, it just, you know, it gloats a little bit too much. But, you know, really before we go into any questions, you know, the main thing that we have seen is that we are all impacted by both the COVID response fund and the importance of, fighting for racial justice. And we feel that it's really important to feel that we can all make an impact. And with that, I'll open it up to any questions that we might have.
We entered the one live. Does anybody have any others? I don't see them coming in yet.
Okay, so I
I
think.
have one more.
Oh, you
There's
did?
one that just came in.
Great,
Yep.
Kathy.
If you make an investment into one of the venture funds, where do any gains go?
That's a great question. With the venture funds, if you're making a direct investment from your account, any of those returns would be returned back into your donor advised fund itself. And you could choose to then either grant that money out or make an additional investment into another fund. It will never go back into your bank account. So that's something that's important to keep in mind. It won't be returned to you directly, but that's something that sometimes our clients appreciate, is that if they invest in one of these funds, for a certain time period, there is the potential that if it does well, they'll have more assets that can be created. One example that I said already, but that we really love, is that one of our clients invested in Beyond Meat before it went public. When that company did go public, their donor advised fund, so their philanthropic money, actually had a liquidity event. And with those additional assets, they are able to now go out and really support a ton of different organizations that are working on a healthy food system.
That's fantastic. And because it's all within the donor advised fund, there's no tax impact to the grantor of the donor advised fund, correct?
That is absolutely correct. All of the investments are actually made by us. And so for those of us, I would put myself absolutely in this category, that might not be as used to making either direct investments or funded investments. One of the nice things is that everything that happens in terms of investments is done by ImpactAssets and is not going to be something that you would have to deal with. So for example, you could recommend an investment into a venture fund. It is as easy as 1, 2, 3. We have a form that we have where once you feel comfortable potentially with a fund, you could recommend that investment. Our team would go ahead and do the review, and the investment would actually be made by ImpactAssets on behalf of your account. But that would mean that there would be no tax implications. You would not have to deal with things like a K-1 or other tax considerations at the end of the year. But you would still have the connection where the investee would still receive the money just as they would any other investment. So it's all of the exciting impact investing with a lot less of the administration.
That's always a nice thing, less administration. And you mentioned that the grantor or someone can recommend a specific venture and then it would be reviewed by your
correct.
team?
So, and the best way, my former colleague used to say this, there can be a little bit of an impact mountain that you could get on. So, as soon as you join in with ImpactAssets, you're having a positive impact. And it might start out where we would say, let's put you into our moderate portfolio or something along those lines. And that would invest you into things like socially screened mutual funds. They are fantastic, those are easily invested in. Something that might be a little bit more difficult and you would have to do your own research, we have different private debt and equity funds that are available at a minimum of $10,000. That would be your mid-range. This is where I haven't gone skiing as much, but maybe it's like your blues. But then when you get to the black diamonds, it gets more difficult and requires more, I would say, experience or comfort with impact investing. That's where you could choose a specific either direct investment, so a company or a fund or something like that, that is not available on our platform. We call that a custom investment. And that's where for $25,000, you could recommend a direct investment into an impact organization. That is something that is available, but is by no means necessary to have a strong positive impact. But depending on the client, there's a different interest level.
Fantastic. Thank you so much. We really appreciate it. I think those are all the questions that haven't been answered yet. So
Great.
appreciate it.
All right, so if there aren't any other questions from the attendees, I want to thank Alex again for joining us. We really appreciate the partnership that we have with ImpactAssets, and we look forward to increasing that partnership going forward, especially at this time where there are a lot of people in need. And to your point, Alex, I think that's going to continue. We're gearing up to go into the fall tax planning season, so I think this is a great time to be talking about not only, smart tax planning strategies, but again, how can we do well while doing good at the same time. So thank you for being here. Kathy, thanks for helping to moderate as well.
Absolutely.
All right, take care.
Great. Thank you so much for having me, and thank you so much.
Have a good evening.